Everyone, it is our third attempt at ensuring the Nigerians have all the information they need. They need to know about federal government's efforts at recalibrating credit scheme in Nigeria. Let's remind you that in April, President Bola Tinubu approved the launch of the first phase of the consumer credit scheme in Nigeria. The scheme will enable qualified Nigerians to have access to credits to enable them afford houses, cars, financing for their businesses and other socioeconomic activities that make life more abundant as obtained in advanced societies. It will also allow Nigerians to live a good life while repaying for their credits gradually over the years. This time on Politics Tonight, let's speak with Engineer Uzoma Nwagba, MDCO, Nigerian Consumer Credit Corporation, on the benefits inherent in the scheme and how you can access it. Good evening to you, Engineer. Thank you so much for joining us on the program, and welcome to Politics Tonight.
Thank you, Olajumoke. It's a pleasure to be here.
Right. So let me first congratulate you on your appointment. I mean, how does it feel being able to serve your country, especially in this capacity as the MDCO of this very critical agency?
It's quite surreal, and it's always a privilege to serve. I am very grateful to Mr. President Bola Ahmed Tinubu, for finding me fit to serve the country in this capacity, and we will give it all we can, everything we have, to make it work.
Right. So from the briefing we have about your role as the MDCO of this agency, the president expects you to bring to bear your wealth of experience in finance and technology, as well as your record in driving financial interventions across Nigeria. In this new role, I mean, in order to expand access to credit to all classes of Nigerian citizens, while promoting financial inclusion and enhancing the quality of life of the Nigerian people as they access the tangibles of prosperity. How has it been transitioning from the private sector to now serving in the Bola Tinubu administration? How do you also define the goals ahead of you?
So it's not that different from the private sector. It's just the scale of impact that one has to make now is a lot bigger. Bear in mind that Mr. President has been talking about this for getting to 2 decades now, even more than that. While he was governor of Lagos State, he's quite particular about this issue of people having a better, higher quality of life by accessing consumer credit. Because one, of course, it means that you can get things that enable you to live a higher quality life now, and then you can pay for it over time. This is something that is not uncommon in most other economies that are functioning, and as our economy as well is this big, it is something that every Nigerian actually deserves. And so the idea is, why would I wait till I'm 70 or 60 to save up to buy a car or a house when I can have one when I'm 35 and live for 35 years having a house or having a car and still paying with the same livelihood? So the task is very clear. The second point is that this is a major way to stem the issue of corruption, because again, the pressure, think about it, we are all socially active beings who act in our best interest. And a lot of times, corruption is about incentives. So people want to amass a lot of money now so that they can acquire things that they need to have a better quality of life. And then the temptations are there. But if you don't have to pay for a house, everything up front, I mean, these are fundamentals of just credit as a way to improve your quality of life. And the third is that it catalyzes industry. What that means is that because there is more money, people are able to access credit to pay for things. It means that those who are making the things now have just not just many more customers, but also just a larger volume of orders. So you see that you go from this rudimentary cash and carry economy to an economy that is powered by credit. The US GDP is only a third of the amount of consumption that happens in the country. In other words, the consumption in the country is twice the size of the GDP, and think of it as GDP as a proxy for their income. It means that all the money people make in the US, they spend 2 times that amount. They consume and live a lifestyle that is about 2 times that amount. In Nigeria, we just have a 14% extra in terms of quality of life. So the idea here, and this is something the president has been particular about, is that we can improve the quality of lives of people to stem corruption, and 3, catalyze industry with consumer credit. And I'm just an appointee that he has found fit to deliver this mission.
Fantastic. All right, congratulations once again. So let's get to the core issue for tonight. And that is President Bola Tinubu's desire to make life softer for Nigerians and also boost economic activities through the scheme. I mean, on two different occasions, the special advisor to the president on media and publicity, during Galali, has been here on the program to prepare our minds ahead of the first phase of the scheme.
Right.
But as the MDCO, let's hear from you directly. Talk to us about how this credit ecosystem will deliver to Nigerians the much desired, robust and sustainable economic structure.
Absolutely. So first things first, maybe I'll talk about how the consumer credit scheme will run, or what the Consumer Credit Corporation's business is. The first thing is that we have to fix or strengthen the credit infrastructure of the country. And what I mean by that is, today there's about 35 trillion naira that is being lent by the financial institutions, that is the banks, the microfinance banks, what you may call the fintechs, but they're also microfinance banks, and lending houses in general, about 35 trillion naira, according to the CBN, being lent to people in consumer credit, meaning enable people to buy vehicles or homes or personal household items or consumption in general. But for it to feel like there's consumer credit in the country, for it to be widely available, half of Nigerians having access to consumer credit, we need close to 180 trillion naira in lending. Now, the financial institutions, that is the banks, those institutions that do lending already, they have the capital. The capital exists in Nigeria. It's just afraid. It's afraid of getting lost because there's a lack of trust. You don't know, there's a lack of data to be able to assess people's credit worthiness, and they don't know who to lend money to and who not to lend money to. So we need first to strengthen the credit infrastructure of the country. And to say it in simpler terms, it means that every Nigerian who is commercially active or economically active will have a credit score. And a credit score that is a true reflection of every lending that they do, how they paid back, when they paid, what they paid. Similar to, and I tell an anecdote of just briefly, an anecdote of my life in the US. I'm actually a product of consumer credit because I went to university in America, and I left Nigeria to go to university, and I got a credit card for about $1,000. And that credit card, because I was judicious with paying that credit every single month for 4 years as a student, when I left university and I just got a job, before I started my job, I went to a Toyota dealership and I got a brand new Toyota that cost almost $40,000 based on the credit history that I had built. So there is a system that can be trusted to verify whether I am good credit. And based on that, I was able to access a Toyota, better quality of life, etc. And the story goes on and on and on and on and on. Never bought a phone, even when I went to graduate school, same thing, all on consumer credit, because I was a judicious credit user and I paid my credit. That's the same thing we want to replicate for every Nigerian who is commercially active. So first, we fix the credit infrastructure. The second is that while we're doing that, the banks and microfinance institutions and lenders in general are already doing some kind of lending for consumer credit. That's why we have 35 trillion naira already out there. And we want to get to 180 trillion in consumer credit lending. Now, to do that, we are going to support them on that journey, even as they currently are lending in whatever methods that they are using, not having that infrastructure as strengthened, not having Nigerians having a reliable, dependable credit score, which we are going to get. But while they are doing their lending today, we are going to support them with wholesale capital, meaning if you want to do more and you have a track record of consumer credit and show that you can lend to Nigerians, enable them access these lifestyle items, livelihood items, and you want to expand your portfolio, we can give you capital to do that. That's part one. The second part is guarantees, credit guarantees. That means if you don't need capital, but you are currently lending your money, you want to do more with your money, especially you want for certain targets that we have. For example, we want to buy Nigerians to buy more made in Nigeria goods. So if you're willing to lend money to people to do more of those things, then we are going to share the risk with you in credit guarantees. So you must have heard about the 100 billion naira capital. That's already, our fund is growing even much more beyond that. And the goal is to be able to support the financial ecosystem and financial institutions to do more lending today. And then the third, which is the last of our goals, is to now do a cultural reorientation around credit. In other words, we have been raised to believe that credit is a bad thing, that you go borrow money when you are in dire straits. Whereas credit is actually an enabler of a high quality of life. Your quality of life doesn't have to be constrained to that income that comes into your pocket, because you're going to be earning that income for a long time. but you can access a quality of life today that can be sustained by your income over time. So there is a cultural reorientation around credit, around people protecting their credit scores when they have it, around people borrowing and paying back, and around just working with the financial ecosystem to be able to get more people to not just access consumer credit, but have responsible credit. And this is something that this is a third line of work. So again, fix the credit infrastructure or strengthen the credit infrastructure so that every Nigerian has a credit score, and all credit, all lending is written to the infrastructure, working with the credit registries and the credit bureaus. And then secondly is doing wholesale lending and credit guarantees to financial institutions. So we have to be in close partnership with the financial institutions. We don't want to lend to Nigerians directly. We want Nigerians to get familiar with accessing credit where they normally would access credit, and just make it easy for financial institutions to do that. I'll say this last thing about financial institutions. There's a reputation that financial institutions have a bad rep, because there is a reputation for not lending to Nigerians, instead buying treasury bills or buying FX. And we don't think bankers or microfinance banks or institutions in general are bad people. They want to do impactful work, and they want to give Nigerians credit to better their lives. But the challenge is that they just don't have a system and infrastructure that they can trust to make those decisions. So we are here to make that happen so that everybody can have a fulfilling job and a fulfilling life.
All right. I mean, we'll come back to this cultural reorientation, because there are some Nigerians who are saying there seems not to be a lot of awareness on this scheme. So many Nigerians are still out there who do not know that there is something out there for them to benefit from. But, I mean, in a statement released by the presidency, the president had said eligible Nigerians should apply or register before May the 15th. I mean, that's in just 2 days. First, what makes one eligible, and what steps can eligible Nigerians take to benefit from the scheme?
That's a very important question, Olajumoke. Thank you. The first is every commercially active Nigerian who has an income is eligible to receive consumer credit. Now, you are going to be assessed by your financial institution, which is why we have decided to take it out in phases. And the reason for that is that we are almost like building I make an analogy of building an airplane while you are flying it. So because we are working with the financial institutions, and not when I say financial institutions, I mean wherever it is that you currently do your financial transacting, as long as they do consumer lending. But we are starting up with the federal civil servants, and then we cascade down to civil servants in general, and then we cascade down to sort of gig workers and what you call the informal economy, and of course white collar workers who have a job, before we go to the general public. And this is because we are on a journey of establishing trust with the financial institutions and establishing trust with the population, and we're starting from those who have sort of a predictable, or would I say measurable, income. So that means that while people have indicated interest in receiving the consumer credit scheme and accessing consumer credit, the next phase of it will be now an interface between people who have applied and their financial institutions. But we are very clear about starting with the civil service. And there's a number of reasons for this. First is obviously the more regimented and predictable income of the civil service. But more important than that is that they are also a backbone and of what I say of the society, in terms of being able to manage sort of social services and the government. And we want to use that as a test bed, first of all. And there are also structures that allow for lending to civil service. However, we have engaged a wider range of stakeholders: cooperatives, informal economy, traders, artisans, farmers. And these structures where they borrow money from are also the financial structures that we're going to use to get consumer credit to them. But bear in mind that, and I'd say this again, that everybody who is going to be a beneficiary of the consumer credits corporation or the scheme in general would be going through the financial institutions, because the point is that we want to build that culture and that habit.
All right, so engineers, I mean, the basis of this conversation is enough clarity, so no one gets confused out there. Now, when you say first phase covers federal civil servants, state civil servants, white-collar workers, plus informal workers with trackable cash flows, while phase 2 covers general public. Could you please break this down for Nigerians to understand? I mean, who falls under informal workers with trackable cash flows? And when you now say general public, who falls in that category as well?
So I think maybe the best way to think about it is that of course, the people in phase 1 are part of the general public, but it's those who are in phase one, which are the civil service, the white collar workers, the informal workers with predictable cash flows. In other words, anyone who's trying to give you credit. When I say anyone, the financial institution trying to give you credit that is using our funding or using our backed by our guarantees, they want to know about your income. You don't have to be a salaried worker, of course not, because the majority of Nigeria is actually not salary workers. There are people who are hardworking Nigerians who go out every day and do their trade or do their business in one form or another. But as long as they have a way to measure your cash flows and measure your income, they would make that decision to be able to advance you credit. We are enabling them to do more of that, and we are also sharing whatever risks they face. Because again, the mandate from Mr. President is very clear. I want several millions of Nigerians to have access to consumer credit. And whatever we need to do to be able to achieve that is what we're doing. We're using the distributions that already exist, and we are putting more power, more capital behind it. So yes, the first phase are the civil service, the white collar workers, and gig economy, that is the informal workers, who can show and have a predictable cash flow. And then we go to the general public, who may or may not have a predictable cash flow, but who are have been able to access some form of credit, build their credit history, grow their credit scores, and can now use that, similar to what I described to you when I built my credit history without even having any cash flows. I just had a credit card that I used to be able to show over time that I have good credit habits, and then they will be able to access consumer credit.
All right, that's great to hear. But could you please tell us how many Nigerians have registered so far? I mean, let's say from April 21st till this moment. And what would you say about the acceptability of the scheme by Nigerians?
The acceptability has been overwhelming, quite frankly. We haven't seen. I have my recent past life. I did done quite some work executing large-scale intervention projects, and this is the largest and fastest uptake of any program that I have seen pretty much in my history, and I've studied a bit of history of programs as well. This is the largest and the fastest. So people really do want this thing. People really do want a better quality of life. We have, as of today, over 1.5 million people just in a space of a little over 2 weeks who have indicated interest that they want to have access to consumer credit. It's an astonishing rate of acceptance for this. And with that, we also learn patterns and their habits and the things they want to use this credit for, which I'll give you a few examples. You'd see that the average request, people are asking for just a little bit shy of 1 million naira and earning 200,000 naira every month, saying, no, if I have 1 million naira, I should be able to cover this cost over the period of 6 months to a year. And you see a lot of uptake, obviously, from these people in the civil service. They want to be able to buy homes, which makes sense. And now that is a telling story, because if you can access capital to buy a home, then you are less likely to take bribes, you're less likely to dip your hand in the coffers, because you now have the home that you want to live in. And I think that's, even the data is showing us that the thesis on which Mr. President has been adamant about getting this done, the data is even, not that he needed that validation in the first place, but the data is pointing exactly to that. About 60% of students indicated, and when I say about 60% of students said they want to get credit to pay their school fees. That's 60% of respondents who said they wanted access credit. They want to pay school fees if they are students. So that means that there is a lot of acceptance and a lot of expectation, and people want to be able to better their lives with credit.
All right, 2 more days to go, and I would like us to go back to the basis, and this is for the purpose of those who may have procrastinated in registering for the scheme or never heard about it. Now, take me through from start to finish, the state-by-state process of accessing credit. And also, for any Nigerian who would like to borrow, what's the maximum amount any eligible Nigerian can borrow?
That's very clear. So first of all, I think amount to borrow is a function of your income, and this is why, again, the financial institutions are the key partners that we're working through, and who are partnering with us to deliver this. So when you go to your financial institution to access the credit, your income will be assessed, your cash flows will be assessed if it's not a salary, and then based on that, you receive credit. So your maximum amount will largely depend on how much you earn as an assessment of how much credit you can carry. It also takes into account how encumbered you are already. In other words, how much you are already owing, which is why this work about getting the infrastructure right and getting the infrastructure strengthened is important for us. Then the second point about step-by-step process, I think the first step a lot of people have taken is even to indicate interest, have an expression of interest to say, this is who I am, this is what I do, this is how much I can handle, I would like to access, and this is my income. So the next step as this is we will now isolate, as we are doing already, isolating based on the phasing that I had mentioned. So we are actively working with the civil service, understanding how they currently do lending, the financial institutions that serve the civil servants, and also how much money those institutions have been lending to civil servants and just the repayment rates. By the end of May, we should have a lot more clarity on qualified civil servants who would be accessing this consumer credit. And then, of course, we will work with the financial institutions that serve them to provide wholesale lending, meaning just capital to support those institutions to lend to them, or guarantees for the specific types of products that we're providing guarantees on. So I think the first phase is even just covering that. And then following that, we would now begin to go to both the white-collar workers and the informal economy. And we'll be very vocal and speaking about the results as they pan out. But it's something that we're quite excited about, and the scheme is moving quite fast so far.
All right. I mean, earlier you said 100 billion naira has been budgeted for the first phase of the scheme. There are those asking, is government looking forward to partnering with investors or private sector on this? I mean, for more funds to be injected into the scheme. The concern really is there are those who think this will, in one way or another, invoke the sustainability of the scheme.
Absolutely. In fact, our work, there is no way the government, at least the government we have today, and the government we've had historically since 1999, would fund 180 trillion naira in consumer credit, because just the budget of the country cannot stomach that amount of money. Well, that money has to come from the private sector. That money has to come from a private sector that has now built trust in a system. That money has come from a private sector that can now assess properly a Nigerian and look at their credit history and their credit score and believe and depend on what they are seeing. That's what they see is a reflection. What they see in their credit bureau is a reflection of that person's credit worthiness, because the capital is there. It's just afraid. So we have to partner with the private sector. That is why we have even started a partnership, and we have very open arms with the financial institutions to say, yes, even that our initial capital is just a seed capital that is even growing as we speak. However, the 180 trillion naira is not going to come from the government. We have also received quite some interest from international partners and donors who do want to not just support the scheme, but enable consumer credit to work, and would provide sort of guarantees for specific types of products. Some who want to provide guarantees to be able to lend more to women or to youth, or to people who want to, I know we do consumer credit, but if you see from the reports that we just released, people who asked for consumer credit, when they said what they wanted to use the credit for, you'd see that a good number of them, almost amongst the highest set of people, would say, yes, I want to buy a home. Yes, I want to buy a car. Yes, I want to have livelihood or lifestyle items. But I would also like some flexible credits that I can use to invest or pay for my business. And you see that most people, when you hear about United States entrepreneurs that you watch on Shark Tank or some of these, or CNN, you see that they tell you that their first funding for their business was from their credit card. Because at that point, they didn't have a business. So there was nothing, no asset, no collateral, nothing to check for a bank that normally lends to businesses to give them money. So they had to still fall back on consumer credit to kick off their business. So this is a massive scheme, a massive opportunity for the country, for us to dramatically change our economy and build a new economy where people can now rely on consumer credit to really turbocharge their lives. And that's why we're here.
I mean, talk to us about the impact of credit bureaus in this scheme. How do they come in here?
So the credit bureaus have a job. Their job is to be custodians of data and information on people's lending. The credit bureaus have done a pretty decent job on being in custody of data on enterprises and businesses who are borrowing and especially borrowing from the deposit money banks. But the data of the credit bureaus as of today is not exhaustive, especially when it comes to consumer lending, because first of all, a lot of consumer lending happens both within the deposit money banks, that is your regular commercial banks, and also outside of the deposit money banks, which are not necessarily or mandated to report to the credit bureaus. So there is a gap in the access to data that the credit bureaus have that allow people to make decisions on who is good credit and who is not good credit, who is owing money and who is not owing money, who should be lent money now and who should not be lent money today. So the work that we have to do is to essentially strengthen that infrastructure and strengthen the credit registry and credit scoring infrastructure. Make sure that all credit, or as much credit, much more credit, consumer credit, is written to the credit bureaus and written to credit infrastructure that can be read by the financial system. So it's a self-fulfilling, self-reinforcing cycle. The more the credit bureaus, the more credit is reported to the credit system, the more the financial institution have credit data to read to make decisions, and the more they can read and make reliable decisions, the more lending they will do. And the more lending they do, we go from 35 trillion to 180 trillion. And the more we do that, then there's consumer credit everywhere. So it's sort of a journey that is crystal clear. And our job is to, first of all, remove the structural barriers, like I have just described, from that, making that happen. And then secondly, while we are doing that, we are also providing capital along the way. So think about it as a jagged road that the credit system, the financial institutions and credit systems are on today. And we are saying, no, we are going to fix the road and make it easier for you to ride on this. We're also going to put more cars on the road so that more passengers can be carried along. So I think that's the idea we have with our job at the Consumer Credit Corporation and the mandate that Mr. President has given us to fulfill.
All right, thanks for that, because I asked the question because I wanted to know if the credit bureaus will still be in charge of helping lenders assess the creditworthiness of borrowers and determine the interest rate and also repayment terms for loans and other forms of credit. But let's go back to the mandate of the corporation. I mean, you talked about it earlier, removing structural and policy barriers at accessing credit facility. Now, Nigeria has numerous financial institutions and, credit schemes, but many Nigerians still face this substantial hurdles in accessing credits. We have a lot of stringent eligibility criteria, which you have addressed before now. But let's talk about high interest rates. I mean, Nigerians will stop asking if this is interest-free. I mean, if not, what interest rate is Credit Corp offering Nigerians?
That's a very important question as well. We are not setting the interest rates, but what we are doing is to enable the financial institutions to offer very competitive and even low interest rates by ourselves giving them, where we are providing either guarantees or wholesale capital, we are providing at very, very minimal interest rates that allows them to pass on those savings, for lack of a better word, to the consumers. So we are very conscious of that as even a high competitive advantage, not competitive, but more like an advantage of being able to have the credit corp, the Consumer Credit Corporation, be a driver and an enabler of expanding consumer credit. And we want to make sure that people can access it at very competitive rates than they currently do today, because we are quite aware of the high interest rate environment. We do also understand the reasons for that. And as we look at driving and expanding consumer credit, it's something that we are quite conscious of.
Now, let's talk about another challenge. I mean, you raised this earlier. You talked about cultural reorientation, because there are some Nigerians who have talked about the lack of awareness or understanding of credit processes. How much awareness or advocacy is the corporation investing in getting this information across to, rural areas, for instance, in local dialects across Nigeria?
Yes, that's very critical. We are investing, or would I say will continue to invest, even double down on providing education and orientation around credit. But I'd like to be clear about something. I don't think credit is foreign at all to Nigerians. I think it's just a perception of what credit is and what it means when you go to access credit. Because think about it, most people who are in Nigeria's middle class or who are in the upper middle class, everybody is running some kind of mini welfare program. I'm sure even you, Olajumoke, you have cousins sister or relatives, distant or close, who would ask you for money, who would want to borrow money from you. That's credit. It's consumer credit. It's just not institutionalized, and it's not gotten from a system and an infrastructure. So you have to find the right uncle who likes you, who has the money to give it to you, who can access you, trust you. It becomes much more complex. And that's why access is so limited. So our first job is to get that infrastructure right, that people can now, in a sense, democratize. We can democratize access to credit, where if I have a credit history and a credit behavior, the financial system can reward me by giving me more and more credit, and I don't have to do for an uncle or an auntie. So there's already a credit is a widely, it's a several centuries old institution. In fact, credit itself, credo, just means, that's where the root word credibility comes from, just man's confidence in man, or woman's confidence in woman, or, you get what I mean. So if there is a system, and when I say system, I just mean infrastructure that people can trust, you can lend money to them. But our job is one, as we build that infrastructure, we let people understand what it is, let people protect their credit scores, let people build a credit history so that they can access more credit.
All right, Engineer, let's take a welcome back, everyone. Thank you so much for staying with us on Politics Tonight. Tonight, our focus is on Nigeria Consumer Credit Corporation. And I've been speaking with the MDCO, Engineer Uzoma Nwagwe. Engineer, thank you so much for staying with us on Politics Tonight. Let's move on with this conversation quickly.
Thank you very much.
Now, one major question, I saw about 3 different times, is people wanting to know how the manufacturing sector will benefit from this system. How does this serve as a catalytic fund to grow the sector? Because as we know, the sector is struggling with 2 challenges: efficiency of production and finding somebody who can buy from them.
Yes. So that's again, very important question. We're addressing the second part, which is finding someone who can buy from them. You put it quite simply and quite succinctly. Most manufacturing is looking for proven demand. And if you think about even the different sectors, whether it's electronics, whether it's furniture, whether it's mobility, and think about even the global partners that's some of the cars we drive here that we import. And I used to work in my past life in the Ministry of Trade and Investment, and was part of these conversations, getting international partners, the car manufacturers, to come and set up shop in Nigeria and hire Nigerians. And of course, we had very strong stipulations around employing Nigerians, training Nigerians, technology transfers, and so on. And the biggest challenge was that they could not have there was no proven demand. There were not enough Nigerians with enough capital, that is liquidity, to purchase those cars or those tricycles or those motorcycles. So I have learned bitterly from that experience. And with consumer credit, we have an ability to say to a car manufacturer, you must set up a factory in this time frame, and we have proven demand. If you say you need Nigerians to purchase 20,000 cars per annum from you, we now have proven demand because there is consumer credit working in Nigeria that can buy 20,000 cars per annum from you. But of course, there's now a knock-on effect of that factory, because now you have employment, you have community development, you have larger effects on the GDP, on production, and even ancillary industries that will be developed as a result of that manufacturing plant. So we have a bit of an obsession with this thing about made in Nigeria and buying locally manufactured goods. And that is where a good part of our guarantees, credit guarantees, will go to for Nigerians seeking to access consumer credit to purchase goods that have a strong local input in it. And the catalytic effects of that is quite unbelievable. We believe that is one of the biggest parts of the industrialization policy of President Bola Ahmed Tinubu.
All right. Out there, some stakeholders have said that for us to have, and I'm sure you would agree with this, for us to have an effective consumer credit system, we must have some credit infrastructure to support that. I'd like you to talk to us about that. Right.
The credit infrastructure is, it sounds like it's a bogus terminology for really just reliable, credible, and exhaustive data. And when I say exhaustive, I mean that everybody's lending and every lending that a person has done is available in that infrastructure, to be queried, to be checked, and for decisions to be made based on that, to give them the next credit and to give them more credit. And so the infrastructure has to be strengthened, and the mechanism through which that is happening today is through the credit bureaus, or what you call credit registries. And they are regulated, there are 3 of them, and there's also sort of coordination or collaboration between them. That infrastructure needs to be strengthened, and particularly strengthened for consumer credit, meaning that the data on Nigerians borrowing, consumer lending, and how they have performed historically on that lending should now be available on that infrastructure. That's one. And secondly, that information, of course, with the right data protection, with all the right accesses, is available to the financial system in its entirety, so that financial system, and when I say financial system, I mean financial institutions and wherever people go to borrow from, that data is available for them to make more decisions to lend people more money. So that infrastructure has to be completely strengthened. We have seen models of this work, and in fact, it's getting quicker to do this. It took the US, close to 50 to 100 years to be able to get the consumer credit infrastructure as efficient, as effective as it is today. Other countries like China is taking them 7 years. So with the advent of technology, with better ways of mining data, making decisions, these things are also become more compressed. And countries that look and mirror ours are surmounting this challenge, day by day. We are just on a journey to do the same and do it faster as well.
All right, engineer, because we have a data problem in Nigeria, what unique identification do I need to tender to benefit from this scheme?
Great. It's very simple. We have a bias for the NIN. And the reason for that is because it is the more ubiquitous ID, meaning it is just the more available, and many more Nigerians have the NIN. And that means that if we want to scale access and do it in an accelerated fashion, then we are going with the ID that most Nigerians have. But the beautiful thing is that the financial identity is the BVN. But there's already an interface, a linkage between BVN and NIN. That means that for those who have BVNs, they would have NINs as well. And that means that their BVNs can be pooled or used or leveraged. And any current structures that use the BVN to do credit assessments would also work for when we are using the NIN. But the NIN is the identity that we are using as a way to uniquely identify Nigerians.
All right. Thank you for helping me with that information. So since the scheme will also help promote responsible consumer credit, what is the role of Nigerians if we are to achieve an efficient consumer credit system?
The first role of Nigerians is to see credit as an enabler of their lives. I think I told a story earlier about how consumer credit has enabled my life. The part of the story that I didn't tell was also that towards when I even ended up going to graduate school, I walked into a microfinance bank and again gave them my equivalent of NIN, and they profiled me and gave me credit to get through a significant chunk of graduate school. And today, the rest they say is history after very many years of a career. Credit is one of the most beautiful gifts that the human ingenuity has produced, because it is something that has catalyzed livelihood and catalyzed life. And people should see credit as an opportunity, not as a statement of hardship or as a fallback when things are hard. So Nigerians have a responsibility to take credit seriously, and that when they borrow money from an institution, I asked that question because
Engineer, can you hear me? I asked that question because we know that to a large extent the culture of repaying loans in Nigeria is poor. So what mechanisms are in place to ensure people do not default?
Okay, first, this is again a very important question. Before I even talk about the credit infrastructure and the data, today the financial institutions that we work with use a number of structures to be able to access and hold people from defaulting on loans. First is obviously holding on to their having access to their cash flows and salaries and domiciling their access to their cash, which is another reason why it's easier for us to start with people with predictable cash flows. And then secondly from that is we also have structures such as the collateral registries of the central bank and the global standing instruction, which are more like collection mechanisms that allow for sweeping of funds from wherever it is found once the borrower has consented to accessing their funds. Now, some of the structures will be strengthened as part of the work and as part of our collaboration with the CBN to enable those more available and more applicable across the financial system. So that's another way. And then ultimately, as people have credit scores that actually have consequences for default, it will start to police the whole system. I think that's the ultimate goal and where we're going through. But because I didn't start with that because it is important to even leverage things that currently exist today that allow for the 35 trillion naira of credit that is happening today to expand. But ultimately, it is to get and strengthen that credit infrastructure and the data that the financial system uses to do their lending.
All right, engineer. I mean, registration for phase 1 will end by May the 15th. That's Wednesday. After this, what next?
Perfect. First of all, the expressions of interest come in several phases. I think the first one, this phase is done. We are already using the information we are getting, looking at the data of the civil servants, engaging the civil service actively for and eventually morphing them to their financial institutions where they will be accessing the credit. So that is the phase 1. After that, the next thing you will be hearing is civil servants now having access to consumer credit and stating what they are using their credits for. And their financial institutions who already have access to who know well their income would now would be able to serve them.
All right. In 1 minute, I mean, for the benefit of those who would like to register within the next 2 days, what's the website again?
Creditcorp.ng. Creditcorp.ng is the first thing you see as soon as you get on that portal, right, and you can register and let us know who you are.
All right. Thank you so much for joining us tonight. It's been an interesting conversation and very educative. Thank you so much. I've been speaking with Engineer Uzoma Wagba, MDCO, Nigerian Consumer Credit Corporation. Thank you for your time.
Thank you, Olajumoke. It's been a pleasure too.